Today was not a normal sell-off. Today was a coordinated global repricing of the AI and semiconductor trade that started in Seoul and did not stop until it hit every exchange on the planet. Let me walk you through exactly what happened, why it happened, and what the next 72 hours will determine about the direction of this market through the end of Q3. South Korea's KOSPI index collapsed 10% today, a single-day loss of 910 points to close at 8,203. The Korea exchange triggered a circuit breaker for only the 10th time in its history, halting all trading for 20 minutes. Samsung Electronics fell 12.3%. SK Hynix fell 12.5%. Together, those two stocks represent more than half of the KOSPI's market capitalization. When they crack, the entire index cracks with them. Why did they crack? Because the AI-driven semiconductor rally that has powered global markets for 18 months had become the most crowded trade on Earth. And crowded trades do not correct gradually, they reverse violently. Yesterday, the KOSPI hit an all-time high of 9,389. Today, it lost nearly a tenth of its value in a single session. The move was amplified by leveraged retail positions, derivatives unwinding, and a staggering 4.1 trillion won of foreign selling, approximately $2.6 billion, exiting a single market in a single day. That selling did not stay in Seoul. Japan's Nikkei fell 3.55%. European semiconductor stocks followed. ASML dropped over 5%. Infineon and ST Microelectronics each lost between 5 and 8%. And the stock 600 technology benchmark fell 3.2%. The Contagion reached New York before the opening bell. The Nasdaq 100 futures were down 2.7% in pre-market. By the close, the Nasdaq Composite had fallen approximately 3.2% to roughly 25,773. The S&P 500 lost about 1.5% to 7,383. The Dow fell 0.5%, holding up because this was a tech story, not a macro story. Inside the U.S. sell-off, the damage was concentrated in three pockets. Semiconductors led the losses. Micron fell roughly 10% ahead of its earnings report tomorrow. Qualcomm dropped about 8.6%. ARM Holdings fell more than 8%. Nvidia declined approximately 3.6% to around $200, bringing its market cap below $5 trillion. Marvell Technology, which just joined the S&P 500, dropped 10%, erasing its AI chip gains for the year. The second pocket was SpaceX. SPCX continued its slide from Monday when it plunged 16.4% on the announcement of the company's first-ever bond offering. The stock recovered somewhat intraday today. Mid-afternoon, it was up more than 6%, after Bloomberg reported the bond offering drew $89 billion in demand, more than 4 times the amount being raised. But the trajectory is clear. SPCX has gone from its all-time high of $225.64 on June 17th to trading below its IPO price of $135 intraday before bouncing. The stock is now a volatility vehicle, and the bond offering has forced investors to reassess what this company's funding needs actually are. The third pocket was the AI hyperscalers. Alphabet fell another 6% today after dropping 10% on Monday, following reports that 2 high-profile AI researchers left the company for rivals. The broader AI Capex narrative is under serious pressure. Investors are looking at hundreds of billions in data center spending and asking a question that did not get asked during the rally. Where is the return? Now here is the catalyst that amplified every one of these moves. Bank of America published a note that shifted the rate narrative. Market pricing now reflects expectations for 50 basis points in Federal Reserve rate increases by the end of 2026, double what was priced just 2 weeks ago. When the cost of financing AI infrastructure goes up, the math on those massive CapEx plans changes. And when the math changes, multiples compress. The VIX reflected the shift. It spiked from 16.78 at last Thursday's close to approximately 19.50 intraday today, up roughly 33% at the peak. That is not a panic level. The VIX has been higher multiple times this year, but it is a clear signal that the options market is pricing elevated uncertainty through the end of the week. And that is the key. This week is not over. Tomorrow, after the close, Micron Technology reports fiscal Q3 earnings. This is the single most important data point for the entire semiconductor thesis. Micron is the purest play on AI memory demand. High bandwidth memory for Nvidia's accelerators, DRAM for data centers, NAND for enterprise storage. The options market is pricing an 11% move in either direction. The implied post-earnings range runs from approximately $1,066 to $1,331. Bank of America reiterated its buy rating today and raised its price target to 1,500 from 950. A Micron beat, strong guidance on HBM shipments, data center demand, and gross margins could be the catalyst that stems the bleeding and triggers a relief rally into Thursday and Friday. A miss, especially on guidance, would confirm that the AI trade has peaked for this cycle and open the door to a retest of the June lows around 7,200 on the S&P 500. FedEx reported after the close today and beat estimates. Earnings of $6.31 per share against the $6.02 consensus, on revenue of $25 billion versus $24.3 billion expected. The beat is positive for the industrial and logistics side of the market, but it does not change the AI narrative. FDX stock moved down approximately 4.7% after hours, suggesting the market is looking through the print at the spin-off of FedEx Freight and the macro outlook. Friday brings May PCE inflation, the Federal Reserve's preferred inflation gauge. With WTI crude oil now below $74 a barrel, down from $98 at the peak of the Iran conflict in May, the energy-driven inflation component is deflating rapidly. If PCE comes in cool, it gives the doves on the FOMC ammunition to argue against the hawkish dot plot from the June 17th meeting. If it comes in hot, above the 4.2% CPI print, then Warsh's hawkish framework is validated and the 50 basis point hike probability hardens. Here is my framework for the next week. The S&P 500 has support at 7,200, the level that held during the June 9th sell-off and again after the FOMC on June 17th. Resistance is at 7,500, the level that capped the rally before the FOMC. We are currently at 7,383, firmly in the middle of that range. Tomorrow's Micron print is the pivot. A beat with strong guidance takes us to the top of the range. A miss takes us to the bottom. The PCE print on Friday determines whether we stay in the range or break it. 3 things to watch. The Micron conference call for any language about HBM pricing and hyperscaler order trends. The PCE number for the energy-driven disinflation signal. And the KOSPI tomorrow. If South Korea stabilizes, the global contagion story pauses. If it sells off again, the circuit breaker was not a one-day event. It was the beginning of a trend. I am Daniel Reed. Keep your data sharp and your logic sharper.